Friends, now we are going to start the chapter Concept of Mutuality. Very simple chapter. It will take half an hour to complete. C category chapter. I repeat, C category. Out of this chapter, we can expect minimum 0 marks, maximum 3 marks. But so far, 3-4 times they asked in the examinations. 3-4 times. So we can't take the risk. It will take just half an hour. Okay. To understand the concept, it will take just 5 to 10 minutes. Just give me your 10 minutes time. I will make you expert in this. Interesting topic. Okay. Chalo start. So we will take small break now. Strategical break. Without moving from the class, we can take the break. Now, in this break, what happened? Our friend Indu and next girl Bala and next girl Karishma. These 3 girls wanted to have Pani Puri. I know girls love Pani Puri more, I think so. That especially in Hyderabad, okay, they will call it as a gupchup. In the break, they will go and they will give 5,000 rupees and they will have Pani Puri, okay. So anyhow, today what happened? Indu, she contributed 10 rupees. 10 rupees, it seems very cheap, 10 crores. And Bala also contributed 10 crore and Karishma also contributed 10 crore. How much is the total collection? 30 crore. After that, they will go and meet the Pani Puri wala. You know, universal truth. All Pani Puri walas are bias. Okay. They will ask bias jada patch dalo. After that, they will ask Pani Puris. They add 20 crore rupees worth of Pani Puri. Okay. What is the leftover amount? 10 crore. Immediately, a sing officer came to know this one and he wrote a love letter. Love letter means 143. 143 means scrutiny. Okay, na? Yes. Anyhow, that is, he sent a notice to these people stating that, Madam, please pay the tax. Question number 1. Whether this 10 crore is their income or not? That is the question. Tell me. Answer, no. No, that is not an income. After all, it is a surplus. Okay. This is called as concept of mutuality. Our friend Pushpa doubt, sir, how do we know? Answer very simple. Contributor and beneficiaries are one and the same. I repeat, contributor and beneficiaries are one and the same. In that case, that is called as concept of, come on, mutuality. I repeat, contributor and beneficiaries are one and the same. See this example. Here, IBK, Indu, Bala, Karishma, these 3 girls, they contributed 10 crore, 10 crore, 10 crore each. Out of 30 crore, they only contributed, they only enjoy the Pani Puri. They are only the contributors, they are only the beneficiaries. Where is the business activities? Correct? No one will have commercial activity with himself. I repeat, no one will have commercial activities with himself. How? I will tell you. Our friend Lokesh, he only did the shaving to himself. After that, he saw the mirror and he only paid 1,000 rupees to himself. Anyone? Can you say, I earned 1,000 today? No. That is not your innings. That is not your earnings. After all, you only paid amount to you. Kada? Yes. Next one, our friend Aishwarya, she only took the banana and she only did the facial. She wasted banana. Okay. Tell me, what is the answer? She only the person who did self, facial. Now my point is, she only paid 500 rupees to her. What do you say? Is it a commercial activity? No. She is only the contributor and she is only the beneficiary. Correct? No one can have commercial activity with himself. Our friend Pragati, she only prepared biryani. She only had biryani and she said shabash and she only paid 2,000 rupees to her. Okay, na? Can you say that she earned 2,000? No. Answer no. The reason, after all, she had self transaction, not a commercial transaction. Correct? Moral of the story, no one can have commercial transaction with himself. No one can earn profit with a transaction carried with himself. Correct? Chalo. Now what happened? In this example, there are 3 girls are the contributors, 3 girls are the beneficiaries. Then where is the element of profit? No profit. Correct? that is after all surplus. Therefore, it is not at all taxable. Not at all taxable. This concept is called as concept of mutuality. Okay, can take 1 crore examples, but batch timings are very limited. So I will take 10 examples. Okay, one is completed. Second one. In my CA final days, we did it. So if any incidents, I am not responsible. Roommates, bachelor roommates. So we are 6 members, I think so. One fellow is the head. He will collect money from us. Now everyone, real 100% real info, will contribute 1500 rupees each. Month beginning, we have to give 1500 rupees to one fellow. So how much it is? 9000. Out of that, he only will pay rent. He only will buy the rice. And every day one fellow has to go and bring the curries. That is a rule. Okay. Now out of 9000, his expenditure altogether is 6000. That's all. So net amount is 3000. So 3000 it seems very simple. So think as a crores. 9000 crores we contributed. Out of that, our monthly expenses 6000 crores, and 3000 crores are our savings. Immediately, a sing officer send a notice. You earn 3000 crore. Please pay the tax. Anyone? Is it a commercial activity? No. Contributor and beneficiaries are one and the same. Therefore, nothing is taxable. Correct now? Yes. On account of concept of mutuality. Clear, sir? Chalo. Two examples over. Third example. Our friend Lokesh and our friend Charan and our friend Nikhil, these 3 members wanted to have gym. That is the reason Mr. Lokesh paid 2 lakh, 2 lakh, 2 lakh. Total with this 6 lakh. They only took one room on rental basis. They only bought the gym items, gym materials they only bought, and they are only doing the gym. Now tell me, are you earning any money? No. So there is no commercial activity. Correct? Gym example I covered. Next one, another topic. Next, number 4. Now, swimming pool in your apartment, there is a swimming pool. You only can contribute the money. For swimming pool, it costs 4 lakh. Every four members are there. Everybody given 1 lakh, 1 lakh, 1 lakh. But we spent only 3 lakh rupees for swimming pool. 1 lakh is the savings. Can you say it is taxable? No. Correct? Take 1 crore examples. In all 1 crore examples, same answer is applicable if contributor and beneficiaries are one and the same. Tell me one best example. Very best example. How many of you staying in apartments? Apartments. Where? Vijayanagaram. In Vijayanagaram, she is staying in apartment. Apartment. How many flats do you have in apartment? 5 flats. Every flat owner has to give maintenance. Correct? Yes. How much is the maintenance in our? 1500 is the maintenance. Let us say 2000 rupees into 5. 10,000. Correct? Yes. Into 12. 1 lakh 20,000. Correct? Yes. Let us say 12 crores. Example sake. Minus the watchman salary and maintenance and common electricity, lift charges all together, let us say 1 lakh. 20,000 crore is the leftover. Tell me, do you think that is taxable? No, because contributors are nothing but flat owners and beneficiaries are also flat owners. Correct? Single paisa also not taxable. Correct? Everyone? Yes. Chalo. Concept of mutuality. Another best example, club in Hyderabad. So many doctors, MS surgeons, they will some surgeries will take 18 hours time to do. 18 hours, especially cancer surgeries will take much time. That is the reason what happened. These doctors, Saturday Sundays, some people will take off. They will go to Secunderabad club. Okay, they will just go and take rest and they will enjoy there. Now my point is, these doctors only contributed 20 lakh, 20 lakh, 20 lakh, 20 lakh. With this amount only, in a prime location, they bought the land and constructed one club for their enjoyment purpose only. Contributor and beneficiaries are one and the same. Nothing is taxable. Correct? Any surplus not at all taxable. Another example, 6th example also I told you, that is club example. Correct? Next one, 7th. How many of you been to Sri Salem? Yeah, in Srisailam, fortunately or unfortunately, caste-based buildings are there. Yes or no? This is one caste community building. This another community building. Yes or no? Yes. That means, the caste people in Kerala you won't find like this. In Andhra only you will have this kind of culture. Not even in Telangana, only in Andhra. They would. Sorry, anyhow, let it be. So some caste people will give 1 crore, 1 crore, 10 lakh like this. With this amount only we will construct one building. Correct now? Yes. Once the caste person came to that place along with his family, he can stay at free of cost. You know this? Or you have to pay nominal amount. You know this? So who contributed to that premises can just inform over phone 2 days before, and happily you can go and stay with your family for next 5 days. You know this? Or you have to pay simply maintenance. Have you heard this one? Anyhow, now whatever the surplus they have, single paisa also not taxable. Correct na? Why? Contributor and beneficiaries are one and the same. Correct, sir? Yes. Next question. Like this, what not? Any example I can take. Another example. I read this articles, North India information. 4 friends, they retired. 3 friends got retired. One is bank employee at another person is a teacher, another person is a some clerk job somewhere else. These three women, same aged people, classmates. After that, after 45, 50 years, they got retirement. After retirement, what they decided, they wanted to take a car, they wanted to roam all the important temples in India. For that purpose, every lady contributed 3 lakh, 3 lakh, 3 lakh, total 9 lakh. With that, they only bought second hand car, they only self driven the car, and they only enjoyed. Now, my point is, out of 9 lakh, they spent only 8 lakh. Now, the 2 lakh is the 1 lakh is the surplus. Now, do you think it is taxable? No. Contributor and beneficiary are one and the same. Clear, amma? Like this, I can say 1000 example. A last example, ninth completed, or last example. Okay, follow. We want to have food. Okay, biryani. For that, separately we can go and buy the biryani. But instead of that, I got one idea. Everybody contribute. We'll go to mandi, or we will just buy the huge quantum of biryani and we can enjoy. So with this, we can save some amount or not? Yes. Do you think that savings are taxable? No, because contributor and benefits are one and the same. Clear, ma? Yes, sir. No, all these are come under concept of mutuality, provided only one condition. What is that? Contributor, beneficiaries must be the same. Now it is your turn. At least minimum 3 to 5 examples you have to answer. Boys, start push one. Tell me one example. Yeah, gift. Okay. He wanted to contribute some amount to gift. That is okay. Maybe contributor and benefits is one and the same. Okay. Any more? Some more refined examples. Any more? You can say anything. I will tell you another example. 10th one, live example. After completion of 10th, my friends, after completion of inter, they gone to BTech. Me, I came to CA. These BTech friends, they completed, they got the job in Bangalore. What they did know, they want to buy apartment. But in Bangalore, apartment cost is 1.5 crore or 1 crore 20 lakhs like this. So they don't want to waste that much of money. Really, they did it. Do you know what? They bought the land, normal cost only, high cost only. They bought the land and they only constructed for themselves. They only constructed. Possible, ah? Yes. One floor taken by another one friend, another friend, another friend, another friend. Permanently, they have taken registered in their names only. You know what? It cost for them almost all 85 lakhs. They saved huge amount, correct? Huh? Yes. Immediately department send the love letter. Notice, please pay the tax. You earned this much. Tell me, is it taxable? Huh? No. Ma, take it for granted. When there is no commercial activity, no need to pay tax. Kada? But only condition is dash must be dash. Contributor must be the beneficiary. Beneficiary must be the contributor. Correct? Huh? Girls, at least tell one example. She is saying that tour. Good example. One movie also has come. Malayalam movie. Anjumal Boys. Okay. Sorry. Everyone will contribute with this amount. They can go and enjoy. Savings not at all taxable. Good. Any more? Any more? Yeah. I can take worst example also. One worst example. In villages, some people will do it. They will buy one goat. They will kill the goat. They will share the non-veg. Seriously. Tell me, do you think it is taxable? No. Contributor and beneficiary are one and the same. Correct? Everyone? Yes. Chalo. Now, I want to break the ice. From the beginning. Listen. IBK. Indu, Bala, Karishma, they contributed 3 crore, they add 30 crore, they add Pani Puri of 20 crore, net amount 10 crore, not taxable. Kada? Yes. Immediately, while having Pani Puri, Karishma got one idea. But anyhow, we are going to class, kada? Why don't you take some parcels? Why don't you sell there? Anyhow, we have 10 crore in our pocket, kada? Why don't you do? Immediately, they asked that buyer, universal buyer, egg plate Pani Puri parcel karo. Now, he parcel and he has given the packet to her. They came to class and they asked her, Aishwarya, do you want yummy Pani Puri? She said yes. Who will say no to Pani Puri? She said yes. Immediately they said 15 crore. Generally, there if you want to have 10 crore, but parcel and extra services and home delivery kind of 15 crore. Immediately, she paid 15 crore rupees to Karishma and Co. Is it taxable or not taxable? Taxable. Because he is not a contributor for our info. Third party, no. So, if you have commercial activity with a third party, it is pakka taxable. Clear? Everyone? Yes. Next. Same sequence examples I will discuss. Lokesh did the shaving to himself. Very great. Then he got one idea. Why can't I do to others? So he did the same to others and charged some amount. Commercial. Pakka taxable. Third one, Aishwarya. One more banana is there. She got one idea. Why can't I do then facial to others? So she did the facial to Hindu and collected money. Commercial activity. Pakka taxable. And next one, come to this one. Rent. My friend, he is preparing curries also. So, okay. One day we asked him, Ray, anyhow you are preparing curry kada. Why don't you prepare little bit extra so that we can start curry point? Pakka taxable. Outsiders taxable no? Yes. Third one, gym. These three members, they are doing gym. Generally gym, initial days only they will do. After that they will never ever go that side. Kada? Then they got one idea. Why don't we allow outsider to come and use the service? Monthly pays this much. Come on, pakka taxable. Next one, what is that fourth one? Swimming pool. In Hyderabad, recently in summer, recently everywhere swimming pool facility is there. Okay, 1 hour 200 rupees, 300 rupees like this they will take. Tell me, what is the answer? Pakka taxable. Outsiders they come and swim, it is pakka taxable. Number 5. What is that? Apartment. In apartment they are doing this, that is not taxable among themselves, but sometimes apartment owners will give parking lot to outsiders. This pakka taxable. Sometimes apartment owners, their cellar will be given to someone else for their services purpose. Pakka taxable. Yes or no? Third party involved, it is pakka taxable, sir. Next, another example, club. Sometimes these doctors will take their friends to the club. Outsiders, Non-members pakka taxable. Temple example. In temple, if you are contributed, if you are enjoyed the temple room premises, not taxable. If outsiders also came to that mandap and stayed there, that is pakka taxable. Next one, next topic. What is that? Rooms. My friends constructed the apartment. No, that is not taxable. But they constructed a penthouse also. The penthouse they wanted to sell to outsiders. That is pakka taxable. Nana, whatever the services you will do for yourself, not taxable. If you do services to outsiders for a consideration, it is pakka taxable. Enough, ma. This is the topic called as concept of mutuality. Okay, now fine. One by one, please follow. Do you have the mic? Ready, na? Mic. Start.
Concept of mutuality emerges when the beneficiaries and contributors are identical.
When contributors and beneficiaries are one and the same, identical, then only concept of mutuality will applicable. Correct? Yes. If third party appeared, not applicable. No? Yes. Next.
All contributors to the common fund are entitled to participate in surplus.
All contributors to the common fund. Now, in IBK example, these three girls contributed 10 crore, 10 crore, 10 crore, total 30 crore. Out of that, whatever the surplus they have, next day, the amount can be utilized for these three girls only. Yes or no? Whoever contributed for surplus, they only can enjoy. Yes? Chalo. Next.
There is no such concept of mutuality in case of indirect taxes.
Direct taxes only concept of mutuality applicable. In indirect taxes, concept of mutuality not applicable. I will tell you the best one. Follow. So many of my students qualified, but 4 5 students they came to me and they asked me this one. What is that? They qualified in their apartment. Automatically they will get fame, name and fame. They will ask, Amma, anyhow you are CA kada, so prepare our income and expenditure account and prepare our balance sheet like this. They will ask. Immediately they prepared. They'll ask, you are CA kada, sign. Now their doubt is, sir, whether taxable or not. If so, what is the rate? No, not taxable, because contributor and beneficiaries are one and the same, provided you should not render any services to outsiders. Are you providing any services? No. No, they will not provide proper services to themselves. How they will provide to outsider? So they will say, no, sir, we are not rendering anything to outsider. Then whatever the surplus not taxable. But Raja, some are taxable. You know what? You have surplus amount. You made deposit with bank. You are getting interest. Interest income is taxable. Correct? Parking lots given to outsiders. That is also taxable. Otherwise, nothing is taxable. Okay, na? Yeah. So, moral of the story. In IDT, not like that. In IDT, it is day one itself, it is taxable. Contributor beneficiaries are still it is taxable. In IDT, clubs are taxable. Okay, na? You will come to know in your GST syllabus. IDT, tax. This concept not applicable. This concept is applicable only in DT. Student doubt. Why? Why? Ante very simple. In IDT, they only clearly mention that self transactions also taxable. For your info, in IDT, GST, branch transfers also taxable. Branch transfers are taxable. But in DT, branch transfers are not at all generally taxable. I hope you know. Number one, Sri Chaitanya Guntur transferred books to Sri Chaitanya Hyderabad, other state. In IDT, it is pakka taxable, but no doubt they may claim ITC, that is different story. But in DT, not taxable. Clear, sir? Everyone? Yes. Over to Pragati.
No one can get profits out of transactions with himself.
No one can get profits with the transaction with themselves. Very good. Next.
Contributor and beneficiary are same in case of concept of mutuality.
If both are same, there is no question of taxability in concept of mutuality. Next.
No one can have commercial transactions with himself.
No one can enter into commercial transaction with themselves. Next one.
Gains or deficit arising out of concept of mutuality.
Listen ma, gain arising out of concept of mutuality will be added to corpus. In case of deficit arising out of concept of mutuality adjusted out of corpus. I will tell you the best example. Some people may aware of this. Vinayak Chavati Mandaps. Have you heard this? Ganesh Mandap. Okay. Is it popular in Kerala? No. Your state is somehow different. But in Andhra and Telangana, it is very, very popular. In Telangana, it is very horrible. For 2 houses, 1 mandap. Seriously, they will do like this. Anyhow, now give me Ganesh Chanda amount. So she given 2,000, 1,000, 10,000, 4,000. Like this, I will collect huge amount. With this, I will buy Ganesh idol and we will do puja for 9 days or 11 days. Okay, after that, we will just go there and throw him. Ade immersion, Ganesh immersion took place. Kada? Yes. So, fine. Last day, we will just calculate what is our receipts, what are our expenditure. Thank God that day surplus was there. Taxable or not taxable? Not taxable because contributor and beneficiary are one and the same. You only given the money, you only come for puja, you only come for annadhanam or something. Correct na? Yes. Chalo. Reverse. Next year what happened? We again collected the money and we spent the money, but there is a deficit this time. What happened? No, last year surplus is there. No, out of surplus, some amount we can adjust. Yes or no? This kind of plus minus is always possible. Still not taxable. Correct? Huh? Chalo. Next, read.
Excess of income over expenditure in a year shall supplement the common fund for future utilization to the benefit of the contributors.
You know, excess of income over expenditure means surplus will be utilized for future deficit. Yes or no? Yes. Chalo. Excess expenditure over income shall be absorbed from the common fund. Very good. Next, read.
Where the entire activities of the SSC are carried on with the mutuality principle and confined only for its members.
Only for your members. Only for your members. Then
It doesn't matter in what form the entity is constituted, the income is chargeable not to tax.
the income is not chargeable to tax. Okay. Some students should get the doubt. Sir, whether this concept applicable for companies also? Yes. Firms also? Yes. But only your activity should be dash. Contributor and beneficiary must be the same. In that case, whether you are individual or a chief or company, whatever it may be, it is not at all taxable. Only one condition. What? You must do services only to the contributors or members. Next.
Concept of mutuality is applicable for even companies also, provided contributors and beneficiary are identical.
It is applicable to members. It is applicable to all associates, even for companies. Next one.
The surplus derived by mutual concern is not chargeable to tax.
The surplus is not chargeable to tax. Many same points, number of times repeated, only one sentence. Contributor beneficiaries must be the same. Next one. If you have both the activities, then concept of mutual activity is not taxable. Other activities are pakka taxable. Example, swimming pool only for contributors, not taxable. Outsiders also coming and swimming and paying money, taxable. Clear? Chalo. Next one. Enter the dragon. Important. Very, 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 very important. Nana, there are 4 exceptions, or literally 3 exceptions. 3 exceptions. In the 3 cases, concept of mutuality will not work out. Number 1, banking. Number 1, banking. Nana, in case of banking business, concept of mutuality not applicable. Understood? You asked me chit. Then also not applicable. Pakka it is taxable. Okay, fine. Number 2, life insurance not applicable. Not applicable. What is life insurance? Tell me. Everyone give me insurance premium. Correct? I will give policy. Only one condition. If anybody died, I will pay lump sum amount. Kada? But do you think how many members will die? Do you think everyone will die? Yes, everyone will die one day, but not today. Kada? Moral of the story. Meanwhile, our company may earn profits, kada? That is pakka taxable. But honestly speaking, I will not give the money to outsiders. I will give money only to policy holders. Policy holders are contributor. Your contributors and beneficiaries are one and the same. Still, it is pakka taxable. Correct? Logic? Next one, Dwakra groups. Have you heard this word? In Andhra, Telangana, it is very popular. Dwakra. What is that? Some female members join in a group. Kada? Everyone will give some amount. With this amount, they will give loans to themselves only. Kada? So they will repay along with the interest. Tell me, pakka taxable. Banking taxable. Insurance taxable. Last. Before going to last point, I wanted to give break. Okay, enjoy the break. Tell me. Break means strategical break. Tell me. You completed CA final. What next? Before job, what next? Before job, after passing, what next? Party. Okay, correct. Before, after party, what next? After party, before job, what next? Come on. Again party. Rest. Very good. Inka. Old batch students we used to say we will go to Goa. We'll stay in Goa. I used to ask how many days? 6 months. Because they habituated anything for 6 months. Okay, sir. Anyhow, moral of the story, you have to apply for membership. Yes or no? CA membership, CMA membership, CS membership. Correct? You know what? If you pay membership fees, you will get number. Kada? And you can attend institute conferences, institute meetings. Kada? That is also pakka taxable. What is that? Any income derived by trade or professional or similar association from specific services performed to members, that is pakka taxable. Now you know, after completion of CA also, you have to attend some classes. CPRs, you know CP, continuous professional education. You have to pay the money and you have to attend the program. Really, contributor and benefits are one and the same, but still taxable. In the hands of institute, it is pakka taxable. Why, sir? Under section 28 PGBP charging section, they clearly mention a CA institute, CMA institute, CS institute, bar council, you are getting money from your members. Okay, you are earning a lot, please pay the tax. That's all. Sir, concept of mutuality. Yes, concept of mutuality is there, but you are one of the exception for that. Pakka taxable. 3 points I told you. Number 1, banking, insurance, professional bodies. Professional bodies. Number 4, one more item is there, partially non-members. I repeat, non-member. Services rendered to non-members. Pakka taxable. Enough. With this, done with the topic. Now case laws. One by one case laws I will ask. Tell me. Okay, start. First case law. Recently happened. Summer season, what happened? Some sports organizations allow the youth to come and play the games there by paying nominal amount 500. Pay nominal 500 rupees. Go and enjoy the stadium in the stadium. You can enjoy. Tell me, everybody in the class, please tell me what is the answer. 500 rupees paid by Hindu to go and play tennis in a stadium. Like that, they got so much of amount and they are saying that it is concept of mutuality, not taxable. Anyone? Taxable or not taxable? Taxable. If you say the answer, it is, no one will give the marks unless otherwise there is a reason. What is the reason for that? She is not a contributor. Correct? Student out. Sir, she contributed 500. With your 500, I cannot buy the cock also. Bat also I can't buy. Yes or no? Then what? Babu, suppose she and he all together they contribute 2 crore, 2 crore, 2 crore, 2 crore, total 8 crore. With the 8 crore, they bought the land and they constructed the stadium. Then they are called as contributors. Correct? By giving 2 rupee coin, you are not a contributor. Yes or no? So this is the first case law, where the facilities of the SSE's club is made available to the person by admitting them as a temporary members would not entitled to concept of mutuality. Therefore, the income is pakka chargeable to tax. Correct. Number 2. You know this. In concept of mutuality, if they have two activities, one is mutual, one is non-mutual. Mutual activity is exempt, non-mutual activity is taxable. Correct. Next one. Yeah. Your examiner's favorite question. 3 times they asked this question. 3 times. Interesting question. Last question. If I explain this topic, chapter completes. Start. Interesting. In Bangalore, I have seen these kind of things. In Bangalore, I have seen personally these kind of things, and I read somewhere also. In Bangalore, Whitefield is there, you know, Whitefield. There, some people, they only start community apartments kind of things. Let us say 1 acre land. This 1 acre land meant for 10 members. That's all. Only 10 houses. Rest of the space for park and a swimming pool, like that. That's all. Condition number 1. Nobody can construct double floor, triple floors like this. Nobody can use AC. Everybody must use solar. Like that, so many conditions are there. Eco-friendly. Okay, nah. You cannot sell to outsiders also. You have to sell to only to society. Society will sell. Eco-friendly, likely mind people will do these kind of things. Now, what happened? There is a rule. If any member wanted to join, incoming member has to pay 5 lakh. If any member wanted to quit, that member also has to pay 5 lakh. So incoming member, outgoing member has to pay 5 lakh each. Now, the society received some amount, whether it is taxable or not taxable. Society said, incoming and outgoing members paid the money, therefore contributor and beneficiaries are one and the same, not taxable, they said. But Essinghaus said, how they come under concept of mutuality? It is pakka taxable. He said like this, they went to court of law. That is case law, Sindh Housing Society, Karnataka High Court. Tell me your opinion, whether it is a concept of mutuality or not. I'm not expecting correct answer from you, but I'm expecting you to participate in the discussion. Tell me your opinion, whether right or wrong. Honestly speaking, if it is high court decision ante automatically defeated under ITAT ane kada. CIT, some people said something, some people said something kada. So intelligence like you also opinion differently. So tell me your opinion. What do you say? Taxable or not taxable? Taxable. Why? Earlier I told you IBK. That is also society. IBK Panipuri Society. They will collect money from 3 members. They will have Panipuri. That's all. No third party. Where is third party? Tell me. Very good. Now that is the main doubt. Outgoing member is also making the payment. No. Incoming ante okay. Outgoing member also paying, or incoming is paying. And some third parties are also paying kada. Sir, anyhow. Answer, not at all taxable. It is come under concept of mutuality. Reason. Question number 1. Why are you paying? A incoming member, why are you paying? Tell me. Why are you paying? To join and enjoy the benefits kada. A outgoing, why are you paying? Already I enjoyed. Yes or no? So as a member, you have to pay 10 lakh. For example, let us say 10 lakh. But don't pay at a stage. Pay at the time of incoming and pay partially at the time of outgoing. Okay, na. I'm not asking you to pay twice. I'm asking you pay one payment only in 2 installments. Kada? Pushpa, when you washed your hands, before lunch or after lunch? Both. Here also the same. Pay the money when you are coming in and pay the money when you are going out. Ultimately, I am not asking money from outsiders. I am asking only money from members. Contributor and beneficiary are one in the same. Example, this is a swimming pool. I asked Lokesh, go and swim, give me 200 rupees per hour. This is called as non-member kada. A Pushpa, already I constructed, I cost it 10, it cost me 10 lakh rupees, give me 5 lakh. Give me 5 lakh. Then he asked me, when I can swim? You can jump now. After 30 years, you can come back. No problem for me because you are also one of the owner like me. Kada? Now he is called as contributor. Here also the same. Hey, give me 5 lakh. Why you will give 5 lakh at the time of purchase of apartment? Tell me. Amenities purpose. Kada? Parking. For all the purpose. That means I am also owner? No. Here also the same. Clear, sir? So, moral of the story, it is pakka concept of mutuality. Not at all taxable. But our doubt, outgoing member, so what? Yeah, whether outgoing or incoming, yeah, they are paying only for the benefits purpose, kada? Not at all taxable. But interest income, taxable. Non-members fee, taxable. Professional bodies received amount, taxable. Chalo, with this, done with the topic. Chapter completes. But warning, this chapter applicable only for DT, not applicable for IDT.